Hello and welcome to Explain the Charts. Today we're analyzing USDCAD, looking at both the news and the charts to make sense of where this pair might be headed. Recent news indicates a mix of factors influencing USDCAD, including tensions in the Middle East, which are strengthening the US dollar, and central bank divergence. We'll examine how these events are reflected in the charts. Let's start with the one-day chart to get a broad overview. Looking at the one-day chart, we can see a lot of choppiness over the past few months, indicating uncertainty in the market. However, notice the recent consolidation around the 1.37 level during the start of June 2025. We saw a bit of an upward trend leading into June, but a consolidation and slight drop at the middle. This action may be influenced by the Forex.com analysis that US dollar to Canadian dollar is nearing resistance and dollar bulls are being tested. Buffett's Howard Dew is forecasting a near-term US dollar to Canadian dollar target of 1.38, which we need to keep in mind. We can see price levels going back a year. It is helpful to look at where prices have been in the past. For instance, we see significant volatility and drops in price that occurred in late October 2024, early November 2024, and mid-December 2024, which can all be related to global financial news. Now, let's zoom in on a more recent period, from around May 15, 2025 until today, June 19, 2025, to examine the more recent price action in detail. We can see clear support around the 1.357 level and resistance around 1.375, making it an important range to watch. If the price breaks above 1.375, we could see a move towards 1.38, which is Buffett's short-term target, but failure to break 1.375 or falling below 1.357 would indicate bearish momentum. This prediction hinges on global risk sentiment remaining stable and central bank policies not drastically changing. For instance, on June 11th and June 12th of 2025, the prices dipped substantially, likely on news of central bank plans to keep interest rates where they are. Now, let's switch to the one-hour chart for a closer look at intraday price movements. This time frame can help us identify potential entry and exit points for shorter-term trades. Looking at the one-hour chart, we can see that the price is currently hovering around 1.37, consolidating after a recent dip. The intraday support level seems to be around 1.369, and resistance is near 1.372. A break above 1.372 on the 1 hour could signal a bullish move towards 1.375 on the daily chart. The likelihood of this scenario increases with positive U.S. economic data, which would strengthen the U.S. dollar. On the other hand, negative Canadian economic data could also provide upward momentum. However, be aware of potential volatility caused by global risk events. Now to recap, key price levels to watch are 1.357 support and 1.375 resistance on the daily chart. A break above 1.375 could lead to a move towards 1.38, as forecasted by BofA. In the short term, monitor intraday levels of 1.369 support and 1.372 resistance on the 1 hour chart. As always, stay informed about market news and be prepared for potential volatility. Happy trading, and be sure to check out more videos on Explain the Charts. Thank you for watching.